subscribe, like, and share these videos. In tonight's video, we're going to talk about the new tariff regime that we're coming into. Plenty to talk about. Let's get into it. Well, welcome, folks. Sorry for the few minutes late. If you recall, I'm starting a little bit after 8 o'clock just to make sure the database is updated. So it looks like we're good to go. I just don't want to be held up and changing the format of what I normally do. So as the room starts to fill up, there's a number of things that I think are interesting. We're not quite back at the scenario we were at last April, when all the tariffs are going on and market was plummeting. I know it felt fairly emotional today. And even overnight, we saw quite a bit of different types of volatility around the London Open. It was interesting. I was up until about 5 a.m. New York time when I went down last night. And there was plenty still going on, and it was just getting started. So we saw an emotion come out, and it's interesting because a lot of certainly the folks with TDS on like Bloomberg, who they spend their whole day, every broadcast every day is about how to discredit Trump, and it's interesting to watch. But the tariffs, the new tariff regime is a lot different than the last one, since emergency powers was overrode. So he's not going to be able to use that. But you can see he came out firing right away. So now, folks should understand Trump now, going back 2016 and looking at his tactics. I always tell everybody, you got to read The Art of the Deal. He's got the ultimate arsenal now, because now he can threaten and move things around. We've got basically kind of a 5-month cycle on these 15% max tariffs. He's got all types of things that he can just throw around at everybody. I had this one show. It's kind of funny because they're the best at spending hours trying to discredit Trump. And one of the things is, well, he just changes his mind all the time. It's all random. No, it's not. It's not random at all. Everything is completely planned out. And so now he has probably the most, I guess, one of the better environments for him, just because he's going to be able to play things around, let something, expire, and then ultimately look at, where's he going to use that next move, what's going here, and possibly what it still will be. Trade deals are fine, right? So what these things are, these mandatory, and the way he can actually direct these tariffs will be the way to get the trade deals. And you already saw anybody that plays with the deal you already had and you try to play that game, that he's got plans for those guys too. So some of these deals have already been inked to a large degree. I'm not sure, to be honest with you, I'm not sure any of them have been inked. They've at least had a handshake behind them, and Trump's going to hold them to the handshake. So those are the things that that's going to happen. So we're going to be in cycles, and the word that's like to be used, uncertainty, and it is somewhat uncertain. But if they get the trade deals locked down, then it's not uncertain at all. And this has always been the real deal, is to do this. And the thing that happens is that what we've seen happen already in the last year is that Trump is basically restructuring world trade. And you're looking at the whole planet being restructured, the flows, how money flows, what things are going, and what the cost, everything. And you see a lot of TikTok videos, other videos that float around X or wherever, and you're seeing where they are actually, using that also to oh, we don't know how to price our products and everything. And, products are always changing. And anybody that's been around any type of retail environment know that product supply chains, all that stuff has been dynamic. And, so it's a play on words. I see it as to create the confusion so that it's easy to say, well, we had to raise our price because of the tariffs. I mean, and even though maybe that's not the case. So we don't know as consumers what's happening from the standpoint of the pricing that we see, whether it's Walmart or the mom and pop shop down the road. They have given the ultimate power to the retail environment, my view anyway. All right, so let's talk a little bit here about the market activity. We're still seeing something interesting. I'll show you in a minute. Got a pretty big hit to the database. Roughly about maybe 1,700 names came off the board in the database on a short-term level, still at good levels, but today was a little bit of a shock wave, and I'll go into that when we get into the database. But that rotation is still occurring. There's mid-cap took over as the leader, and it's pushing pretty heavy. Let me just get a number for you. I've got it on another monitor here. Yeah, so mid-cap up 7.2%, Russell up 5.6%, Dow Jones up 1.5%, and S&P minus 0.1%, basically flat, and NASDAQ down 2.6%. And you would think it was down 26.6% the way it's being talked about, and how the large cap tech stocks are, it's like a disaster. It's not, okay? It's not even a correction. It's really just noise at the top, rotation going on, some profit taking, all of those things happening. So, it's being played up. I noticed that the headlines flowing around, at least my environment, on my phone and other places I visit, they were playing up that the Dow Jones was down 800. That sounds a whole lot better than down 1.2%, right? So it was like, oh, it's down 800, like a disaster. And so the Dow Jones is still a punchline on a lot of headlines because the numbers sound better than they really are. Mainly because it's $50,000 index, which is pretty bizarre considering when I started in the market, it was like 1,200. Okay, so a lot of that is currency debasement and inflation. I've been telling you folks that have been hanging around me since 2000 that the best inflation hedge is the S&P. So Buffett's right. You just buy the S&P, you buy a portion, and you just hold it. So you can use that as an inflation hedge. It's possibly better than gold and everything else if you look at it. And, so, all right, so here's the plan for the night. I don't see anything really as dynamic as it feels, so we'll go through the database, we'll go through our normal rotation that we go through and go through the indexes. I would like a comment even here on YouTube or on Substack or even on X is about what I did last night with the Substack is I put the weekly sheets out there. I know there's some people are using the daily sheets to day trade off of, so I'm going to do it that way unless you guys yell at me a lot. And then the problem with Substack is they only allow me to put so many graphics in an issue, and then it forces you to go to Substack or to the app, I think, to be able to see it. Most people I've looked at the stats are reading the Substack off of their email. So if that's what you're doing, you can go. I actually like using the Substack app because it'll read it to you. So if you're riding in the car and you want to listen to what I had to say, you just click the button and play it through the speakers in your car, so you don't have to listen to that. However, but so it's kendallreport.substack.com, $8 a month. There's a free trial, I think, for a week or 10 days, something like that. But go ahead and sign up there if you don't get it. There's so from there, we'll just kind of go through I'll try to get through this pretty quick. We only spent about 10 minutes, and well, going through some of these comments that I had, I just don't see anything material happening here. I know people are screaming that there's some collapse, and you see all these videos. Trump's going to say something this afternoon. I think it's the alien report. I'm actually looking forward to that. And yeah, so I'm looking forward to reading some of that stuff. Should be pretty good. I could drive to Roswell maybe in about 7 or 8 hours or less. So I guess that place will be, that's probably a place to buy it and set up some restaurants around that place, because everybody's probably going to be going out to some of these sites that are out there anyway. Side note. All right, so let's go ahead and get into the database here. And what we'll do is take a look here. I was somewhat surprised. We're at 60%. We were pushing up towards, we got what, 2,000 and almost 2,100 new cells right here. You can see 1,400 on 1.2, 778 here. We're at 60.36. We're down to 4 long 8 sectors. And so we only lost 1 sector. I don't know. Yeah, here it is down here. Let me get off the screen. That consumer cyclical was a sell after today. Transportation has been the most strongest, and I noticed in a sector rotation today, from just looking at pure sectors, that was one of the weaker sectors that happened. And so it makes sense. It's the longest in the tooth right now. We're 73 days. Normally it holds 30, so we over doubled the holding period. And I've been talking about that lately. So some of these groups, that's got to be getting pretty vulnerable to getting an exit. So we may start to see the sectors thin out a little bit. And what's happening, just so you know, is that rotation in the mid cap and small cap is real. I've been talking about that for a number of weeks now. And what that tells us is that the database is going to start to rotate. Maybe the consumer cyclicals are usually bigger names in there, so that may be part of what we start to watch. I'll continue to monitor that, and in between when I'm writing Substack and other efforts that I do in research, and I'll come up and talk to you about some of the rotation. But that's still what we're seeing. We're seeing the database roll into a different regime from what it was. The old regime was large cap, techs, all of that was driving the markets. Now we're seeing it roll into these mid and small, with mid being the biggest part of it. So as far as the sectors go, the other vulnerable are basic materials with the metals, but they've come back alive. We saw a nice run in gold today and silver. So all of this stuff is just rotating here. And folks want to make something bigger, like this is pre-market crash. I don't think so. Not with what is going to start to unfold as we go through 2026, because we're still going to see this CapEx or these big investments start to come into play. And I also believe one of those, the rotation with AI and efficiencies are going to come in. And I was just on X before we came up, and I saw the funniest meme in the world. If you have ever seen the meme, the little video, it was out many years ago, maybe 5-7 years ago, but these guys out somewhere in the bush in Africa gave an AK-47 to a monkey, and he just starts shooting and almost kills these guys. And Elon put up the meme. He goes, "This is like giving the whole Claude open, the open new. It's kind of new, the Claude Claw out to and giving it full access to your computer. It's pretty funny because there's a lot of serious potential breaches. So I'm a proud owner. I've got it in a box here, brand new studio. It's amazing. So I'm going to be deploying some agents around here with my Mac Mini. And you can't buy these things right now. I got the last one the other day that was in the store, so that was interesting. So anyway, let's move on. Let's go ahead and go over to the. Bear with me 1 second while I transition. Yeah, so it's a lot's changing quickly. This project that I have going on redoing WaveTech is doing amazing. Those of you on the Discord, I'm going to give you a glimpse into the world. I'm not going to give you the files just yet, but they will be coming shortly. But I'll give you a Claude link so you can at least scroll around this new platform. Matter of fact, I'm programming as we talk right now. So let me just get this up here so. All right, here we go. So this is the daily S&P. Daily S&P is doing what I'm trying to tell you it's doing. It's in that range. It just keeps working it. We're up a little bit, up 6 handles right now on the futures. But it's still in that caterpillar. We're trading down to the lower end. We do have some downward new fib targets on the downside. Let me get that so you can see it. But the whole, we're looking at 68.21. I think we printed through that. 67.36. That's down at this next level where my cursor is, but we're still within that range. And literally, if we look at what's happened here, give me a second to count this. So we've had 3 upward reversals and 2 downward reversals in the last 5 days. And when they unleash this power and the selling comes in the waves like we saw today, it feels like, oh my gosh, here we go. And then it catches itself. One of the other things I want you to look at here, if we just look at the algos, they're still printing this sideways range. You folks are probably tired of me talking about it, but this is the regime we're in right now. It's sideways, choppy, trendless. The weekly fact sheets that I put out last night are all still bullish, and I thought it was interesting the commentary that came up, because the way I'm building that now, I have the benefit of the code has the benefit of looking back multiple days, so it can actually write commentary on the other sheets using that data, the way that it's programmed. So it gives you a little bit of more than just today. And this was on the weekly, it was pretty revealing. So, but basically nothing's happening. I know I want stuff to happen, but those straddles are still sucking in the money. I need to find a way to put some of those out there. So I'll work on that. That would be nice addition to the channel to show how those things are working. But the bottom line is, I guess I probably have to get Thinkorswim, and maybe I'll get together with my buddy Charlie, who is one of the founders of Thinkorswim, and we can put something together. It'd be real easy to put a model together for this. But that's been the play for months. You could have been rolling these strategies every month for months. Okay, so it's been good money. So one of the things that I always try to relate to, while I do not use trend lines, I do use moving averages. These PPMs are telling me that angle of attack that I talk about all the time and how to read a moving average. Most people just look at a moving average, oh, it's going down, or as you know, that been around the channel, these indicators tell you when the probabilities are higher, the highest, or not to hold or to violate in a directional change. That's what these indicators are about. They're not oversold over. They're just looking at those percent changes and the angle of attack and what's the probabilities of a continuation of a trend, up or down, doesn't matter, or what's the probabilities of getting above the moving average. Because the big dilemma, and most of you that ever looked at a moving average, gee, I wonder if it's going to hold that moving average. Is it going to stay above? Is it going to break? In 1983, that was a question we asked, and we spent a number of years validating and understanding that, and actually coming up with an answer when the probabilities were highest for those things to happen. So what we're seeing though is a convergence way over here coming into April, and I've been telling you based on the database that the database is telling us that somewhere around June to July is when there might be a change in the regime. Otherwise, right now if we go to weekly, maybe I'll touch on it since I'm bringing it up right now. If we go to a weekly chart, there's still plenty of upward trends and high probabilities of the uptrend continuing. It's just the ranges and the breaking points the numbers get wider and bigger during these times. So the 200-day moving average is similar to the 40-week moving average in value. If you think about it, 200 days, if we do 40 weeks, there's 5 days in a week roughly, and they're just calculated from one data point on Friday instead of 200 data points, and they vary, but they're within a range, and the weekly intermediate trends tells you a lot about what to expect by using the WaveTech indicators and just understanding what those are. And then with the machine learning, the dots on all the dots you see in this page are forward projection based on the probabilities of what's already happened, right? So there's a look back period, and it's estimating what the probabilities are. And if you've ever been on a live stream during market hours when markets are really moving, I show you the 5-second chart, you can see how dynamic these things are changing. There's a lot of noise in that chart, but you can see the functionality of the machine learning and all that, and that will tell you a lot about what's going on in the changes in the dynamics. Difference is we got to wait a whole day for the next data point on how these are calculated. So, but it's interesting. If you have a TradingView Pro, the top echelon of their subscription and real time, you can put it on 5 seconds, and put it on S&P. And NASDAQ's insane what goes on there because the beta is much higher. But if you just go to the E-minis and put them on there, you'll see what I'm talking about. It's pretty fascinating. So what is this telling us? That probably the big pivot's around 6,800 rounding off. So you could print down to 6,650. You could print up to 70, almost 71. That's been the range. So that is just like the giant pivot that we're going to continue off of. I don't see that changing unless we see a big breakdown in the intermediate models and the holdings, and intermediate is above 65, almost 69%, I think. So we're fully invested in the markets, even though it doesn't appear they're going anywhere. When you're looking, if you judge what's going on in the markets through an index, then you're not seeing the world. That's why when I show you the database, we're looking at 14,300 plus individual symbols, and that rotation is pretty obvious. So there's some crazy good trades out there. They're just not in indexes. So if your focus is index, then that's what you get. I'm pretty sure when I get this new release of what I'm working on right now, everybody's going to want to have the WaveTech, especially if you're managing your own 401k or you want to manage a stock portfolio versus just being a speculator in indexes. The main goal of this channel, the way it's right now, is some education, but also understanding the macro and just the trends that are going on within the indexes. There's a whole nother world out there that I also live in, that I'm hoping that soon we'll be able to start to bring it into you, because one of the things I'm doing with this new product is you basically have Virtual Bob doing analysis on every screen. I used to give you a spreadsheet and say figure it out and give you some training videos. Now the product just does everything, tells you what's going on, what to look for, probabilities, look forwards, all kinds of it's a whole new world. I'm like really excited because we built that first model in 1994 and managed literally hundreds of billions of dollars during 1998, well into, and we still have like 15 billion running. But I mean, we were running some big money with that process. So it's nice to, instead of having to talk to clients and tell them what to look for, I'm doing it in a virtual world. And we got so big on this project that I had to make a module because it was just getting too crazy on what I built. So anyway, but this is the world we're living in right now. Complete sideways, trendless, volatility, uncertainty. Trump's going to keep that going. Will we get another April? I don't think so, but anything's possible because you get the news, and we have the geopolitical situation in the background too, right? So they could launch and start a new war tomorrow morning or tonight in Iran, so we'll see what happens. As I've talked about, and just looking, just a few minutes ago, I was telling everybody what the returns on the year. I've got it on another monitor. So mid cap up 7.2, Russell up 5, basically S&P down 0.1 flat, and then the composite down 2.6. So what we've seen is profit taking and a rotation in leadership within the NASDAQ index as well. These mid caps and small caps, they exist in the NASDAQ index, and this is the 100. This is actually the composite. The thing I have on the screen right now is the 100, the futures, but in the composite, that same rotation is going on. It's not just S&P. It is the entire universe is seeing that. So while we're down 2.3, some of those top end stocks might be doing quite a bit worse than what the 2.3 suggests. But when you see a rotation and those become a kind of not a big participant once they start to hit their support levels, and you see other NASDAQ stocks coming into play, that's where the dynamics happens within an index. Because if you could see a full real-time scatter graph on the NASDAQ and then do some compositing and doing some different types of mean diversions and all kinds of stuff, you'd probably have maybe somewhere between 5 and 10 sub-indexes within the index. And then when you composite those out, that's why we're down 2.3, because there's some things that are much worse. We used to break out some of those elements, and what I'm finding with the new world we're living in, I'm pretty sure that the analysis that you're going to see from me, especially when I get that monster box opened and get this new environment, because I'm building a complete new data center here. I'm going to have 2 monster powerful PCs and a Mac Studio and a Mac Mini, all linked together. They're going to be headless. I'll be able to put any of these monitors up on screen that I want and view any of So those machines are going to be working. I've got a 10 gigabyte fiber line coming in here in a few months. So I'm excited. I'm building up for it right now. But there's a whole lot of things that I'm going to run from right here. We've got servers and co-location, you call it, a cloud where we run all the other software. Portfolio Expert and WaveTech are all run from the cloud. So I got a lot of power sitting here. This is like it's not an F-16, but it's a pretty powerful jet we're setting in here when I get this all built out. So it'll probably be end of summer when all that happens. But anyway, so this NASDAQ, I just want you to have the understanding of what's going on in a larger world just outside of the S&P's at 6870. That's just one price. All it is the index. When you start to dig, my world is a much bigger world of those 14,000 symbols. Those are mutual funds, ETFs, and stocks, right? Everything. And bond funds, all of those things that exist out there is the world that I'm setting in here and trying to give you a larger view other than an index view. Index views are fine, but they don't tell you, it's sort of like looking at maybe a big pond or a small little lake, and it looks crystal clear, but if you look under the water, there could be all kinds of things going on. And, so that's kind of the way I see the world. You see the surface, which is the index. Then when you start to dig in, you see other elements. And this is why I've done, I would say, a pretty good job of not getting emotional about the indexes when you start to look at a little deeper. So my goal every night here when I'm on is to give you a little different perspective, because we can see much more here than the average guy bringing up TradingView, drawing trend lines. Okay, that's pretty low level analysis. So there's some serious compute hanging around me here, and it's not only that, it's processes that I have developed over my career. Some of these things go back, like the PPMs and all those go back to 1984, and on the portfolio management side, that is, that's been since late 1994 was the first models, and then 98, and then we expanded during 2000s and all the way into and still developing some processes now, but it's pretty stabilized. Around 2008 to 10 was where the height of the money and the process that we were driving. So that's 15 years ago. So now I've been empowered to be able to add a lot of value from things. Instead of trying to tell a programmer what to do, I am now telling Claude or whatever else I'm using to look at the metrics and how to look at it. Came up with an idea today I've been thinking about for 20 years, and Claude and I were collaborating on this idea, and it became really insane. And I've thought this for years. I have a lot of data here that not only is data, it's not open, high, close, it's unique data to the process that I built going back into the 1980s to current. So it's much, no one else has even can't get to the access of what I have. But we ran across something today. Claude and I, ran across something today that my head's spinning as I'm talking to you. I can't stop thinking about it. So that means I will be getting less sleep. So appreciate everybody being part of this channel. And like I said, this is my goal to give you this. So let's go ahead and finish up. We're about half hour in right now. And what I'll do is I'll give you we're going to go through the metals. They need to be looked at, I think, a little heavier right now. I'm going to spend a little time on Bitcoin here because there's some serious danger, I think, coming into Bitcoin. you think it's over, it's not over. There's a couple trigger points that I'm going to bring up tonight that I think are going to be, if you don't know them, you just need to watch an area, because if it breaks a certain number, and I warned you about a number, 6 weeks ago, and it did that, and we see where we are, and there's a lot of pressure. So I'll go ahead and talk about that when we get there. All right, so let's go ahead and let's move on. I do want to cover the treasuries as well tonight, because there's some things going on there that I think are pretty important. I had warned you, told you, however you want to look at it, whether it's a warning or not, that I was getting some serious projections for the potential for the 10-year to get into the 390 range. There's even 375 on the downside, which is somewhat insane to think about. I think we're close to stabilizing though, and I wanted to bring this chart up tonight, talk about it. This is daily. We'll also spend a minute and look at the weekly, because the intermediate is going to drive this model. And I am still in the belief that we'll see at least 50 to 75 basis points on the Fed funds on the front end of the curve. My argument has been for a while, so I want to be careful not to build my own bias into my analysis, is that we would stay just above around 4%. So far that's true, but some of these projections I'm getting need to be acknowledged and paid attention to. One of the things I've learned just sitting here in front of you and writing commentary and being an analyst for so many years, is when the certain elements come in, you do not stay with your original analysis. There's a point where you have to acknowledge it, and then if it gets validated, you have to get deeper and talking about what it is and what the effects could be and how it flows, especially something like interest rates or bond markets and equity markets, that kind of correlation. And so I'm going to go through that. So what we're seeing on this chart here is a daily, and what we're looking at now is that the algos are suggesting that we're going to bottom. You see the red dots here. Let me just blow in on that. These dots right here are the forecast, so a few more days down and then come back into the pattern. And what's interesting, we're right at that 4% level, so we're starting to see at least the algos say, hey, watch this, we could get a little bottom here. But what we're seeing also, all of these moving averages are down, so that angle of attack is pretty steep, which suggests that there's resistance points on any kind of increase in yields coming from here. And they start, right about 405, 408, and then there's the next level is up around 410, 415. So could we come back into that range? Absolutely. That's what's you'll see down here, the PPM1 is forecasting that that's going to happen. The other indices are tied to the 21, 40, the 200. The 200 is a very steep, this doesn't look like much because you think about this is daily, 200-day moving average, just once it gets in that slope, it doesn't turn around. So that's going to be a major cap on any increase in yields. And even if we look at the projected slope right now, around 420, and that's about where we've gotten. So when you start to do analysis of these ranges that are likely to happen in interest rates, we're literally 4.25 just in general terms, and you can fine tune a little bit of these levels as you go through this. But we're pretty close potentially for a low. We're going to do a quick intermediate view as well. So what we'll see, let's go ahead and go to that weekly view Let's see if we've got some to get through the rest of these markets pretty quick. Yeah, so this was the chart that I showed you folks last week. Let me tighten this up. So you'll see quite a few markings on this chart, but this is one of those classic. I'm going to bring out the drawing tool here just for a second. But this is one of those, especially when you get to intermediate level, these are one of those places that you want to pay attention to some of these patterns that are being drawn in by the moving averages. Here. So this is where I'm talking about right here. These little wedges that get etched out. This is a 200-week moving average. And you can see that right here, these red dots are being forecasted that we're going to go down to that. And this first Fibonacci target right here is what is probably the absolute floor of this. But I'll show you the numbers here in a minute because it's pushing 375 at that first line. Let's see if I can see it by it. Now I have to take this drawing tool off. It freezes the screen so I can draw on it, but I'll give you the numbers here in a minute. So we've got these upward targets here, then we got 3 Fibonacci targets. This is ridiculous, like 310 or something down here, and this here is like 375, right? I've got double arrows there. And it's projecting, the red dots are projecting that's where we're going on an intermediate level. So if that happens, the only way that happens, and it would not be good if I brought up the yield curve right now, it would not be good because that would flatten the yield curve again, which would be not a good plan from a structural standpoint, and especially for the rotation trade to the mid cap and small cap. So let's draw in I just want to get these numbers. So here we are. Yeah, 370, 371 roughly. I can bring up this number over here. Low target 1, 371, 335, 314 is this number down here. No way we're going there, but this is realistic. And it also brings us in the bounds of this big zigzag pattern that we've been in. Down to, that's 360 at the extremes roughly right there. Let's see, 360 exactly. So it's saying we're still in this. If we had to argue going back to 23, this is when the Fed started changing the game a little bit. Since then, this has been where we've been working, and we've seen multiple fib targets down around these ranges, and we've met them, just come close to them, but this has been the range. The same thing on these upward fib targets, I believe. Let me blow this up. Yeah, look at this projections that we had right here as we were looking at potential, this was 550, this was, I think, 509. And these were island projections. And what we do when we get these fib targets, those of you that have the indicators, if you don't, you can go to kindlereport.com/indicators and with plural. But what you get here is you should get some kind of confirmation when you get these upward projections. What you want to see is the algos are showing they're increasing, telling you that there's higher probabilities of the market reaching those upper bounds. And right now we've this is pretty much across all the markets we're looking at. We're just kind of static, flat line. So that'll be interesting to see how that plays out as we go forward. So let's see if we can get through these other markets pretty quick. We're going to gold here. So I keep showing you this. I mean, look at these dots are the algos. This is going out. I'm not sure how far in the future, if I can get to that. Yeah, so the algos are looking out right now. Future bars looks like only future bars only 50, but this is also a weekly chart. But I mean, that's crazy angle of attack. And what I've been telling you, there's a couple things I want to just talk about the gold here. Gold has a completely different pattern regime from what we're seeing in silver. But let me just show you real quick here. I've told you about these bubbles. There's more or less one, these volatility where you see the orange lines on this chart. This is the extreme projection off the market grid indicator. And it's calculated completely different. It's not Bollinger Bands. These are actually Fibonacci and range bands that get projected out of volatility, actual real volatility. Bollinger Bands are standard deviation lines, completely different. But they do something similar. If you've used Bollingers or looked at them, you'll see they get these bubble formations. But even in Bollinger, they have to normalize those standard dev lines, normalize before you get the next directional movement up or down. And the same thing happens here. So we got this big blow up when we got this peak value. And so we get this bubble blowout. So we are still, this is weekly, we're 6-8 weeks away from normalization. So you can see that all the top layers here, they're turning down, turning up, and they're starting to converge, and the volatility bubble has to go away. Once that normalizes, we're going to be in a position to do a directional move. And you could argue from the big reversal spike over here, that big reversal spike that we got right here. So in 2 weeks, that's a weekly chart, 2 weeks we went from, I can't get the exact numbers right now, but we went from almost 6,000 to down here, I think it was 58. But now this is going up. We should see at some stage this is going to stall. We'll come back in. These volatility market grid will continue to close in, just like it did over here where it came in. This one's more of the bubble formation. It was more extreme, so volatility is more extreme, so you get a bit of a different pattern there. But this will just basically start to work its way. Markets, if you look here, and I put this stat out, it's only about 12% of the time that any bar exceeds the top or bottom. So we had 2 bars that exceeded the top end of this range right here. But if you go through like a long piece of data, it ends up to be just a touch over 10%. So 1 out of 10 bars will exceed that extreme up or down. And it's fewer than that. It's only about, I think, about 6% of the time that when it does that it closes at a range. So we talk about it closes above that value of that orange line. So when we're watching, these are just extremes that we're watching. But you can see the trend plotted out is, this is all the way toward. Let me just get this off. So these. So here we are right here at August. This trend line is being projected that it's going to be above 6,700 as we come into end of this year. So gold, that's a lot. That's another $1,500 on gold. Very interesting pattern. But here's what's happening. Just so you know, those of you have the indicators, it looks like this is weakening. It's going to go down. Even way over here, this is a point projected to be at 0.75, point positive. 0.25 is a trend. So it's the probabilities of getting below the 10-week moving average for as long as we can see or expect is minimal, like around 10 or 15%. So anytime you see a value that's close to the 10, I've been saying this for a while, we got this value right here. You got down to 44.23. Let me see if I can get a value on the 10 here. Yeah, there. Hang on one second, I'll give it to you. It was 45.82, so we dipped just under that. That was a buy all day long on that collapse. And that, as long as you have that angle of attack, the probabilities are literally 90% plus that you're going, so almost guaranteed that you're going to stay on a closing basis above the 10. And I can show you a million instances. I've been doing this same technique since really 1984, 85 is when we came up with that rule. And especially if we go over here, when this happened, the value was 1.6. I won't bring up the probability chart, but the probabilities of it staying up was 0. You buy this. Anytime you're under. It doesn't mean that what happened was going to happen. What it does mean is that at the end of that week, this is a bar, that's what's going to happen. Take a quick look at the dailies. We'll take a look at silver, and then 8 minutes, boy, I'm in trouble. I'm going to go over today, folks, because there's a big dialogue. But when we look at the daily, you can see the daily values are much different. So that's why many times I'll talk to you about the intermediate is the only thing that matters here. It's driving the main primary trend. Daily right now is still correcting that noisiness. So you have to be willing to go outside of looking at daily bars because you're looking at more noise. When you go to the intermediate, that's why those intermediate sheets that I put out last night give you a better instinct on what the trends are doing. All right, so let's go ahead and go to silver because I got to get down here. Silver finally got up to this declining 21. I've been talking about it. We're right back under here. The algos are suggesting that we're going to come right back into the range here again, somewhere 80. We're going to just put the range around 79, probably upper band around 90, 92. So we should kind of fall in here, more consolidation. There's a pivot up here, which was the ultimate pivot, which is here at the 111 area. That's probably a ceiling on any crazy rally. That's where you'd be a seller. But right now, the on a daily basis, momentum's not really there. When we go to weekly, this this does not bode well. Gold, look, let me just look what's being projected here, and I know the silver guys are going to say something here, but look at that bubble. I just told you about this bubble. This is gigantic. This is why I was telling you both gold and silver are in that same bubble formation from the market grid viewpoint or the extreme volatility viewpoint. But you don't see silver trends shooting straight up like gold. Completely different. And really, this here tells us we're going to a lot of work maybe into summer. Volatility, I mean, we could print up to 100 in here. So I'm not saying there's not great trades. I'm just telling you the current regime that we're in is much different. And then when we bring in the PPMs, they're all declining, where the gold, especially on a weekly basis, had a whole different configuration. And this has been the case forever with gold and silver. Gold's been the leader going back as far as you can get. I know that silver guys got so excited that they created that bubble. If you didn't see my special report on silver, go to the Substack. It was probably a month ago now. And basically called right where the exhaustion point was, and everything that's happened on the screen there that you saw was forecasted ahead of time using the indicators, but also these algos that I'm showing you here. They don't look at all similar. Let's just go back to gold for a second. I mean, gold is still positive here. It's got the bubble, but it's got these big projection lines up. Back to silver. Silver, I showed you way out going to the end of the year, November, that gold was still very positive. These are negative numbers. This says that silver is going to enter into potential bear market. I don't think that's the case, but I do think we ultimately come into these moving averages. The 21 has got plenty of angle of attack to hold it. So in gold, I just told you 10-week moving average. This is weekly. It's the 21-week moving average. On silver, you buy them all day long. Simple average, don't have to be exponential or weighted or any of that. VWAP, nothing. Just a simple moving average. And so probably that's around $71, and there's a big pivot at 62. Below 62, then you're in a full bear market again. I don't see that happening. That's not what I'm calling for. But I do see this consolidation happening here. All right, let's get into Bitcoin. What I do. Is it me? Why is this? Oh, what is that? I'm trying to figure out why Bitcoin's not, okay, it is Bitcoin. It just looks like it. I'm funny. I thought it was. Now it's showing silver. Yeah, for some reason, it's not updating. Nothing's working. If I hit it, I think I might have blown up my little Mac Mini again, memory. I don't know why it's not updating. I'm going to take you off screen for a minute so you don't have to see me doing what I'm doing here. Yeah. Oh, believe it or not, it just updated. Okay. All right, so here's Bitcoin. Scary scenario. This is daily. We'll start here. Daily is suggesting that we've got some downward pressure. That the only number that low that we printed at 59,930 is critical. If we hold that number, we're okay. I'm going to show you, but the algos are still very, very negative. The peak still is this 21 period moving average coming down. Let me just get you into that world. So this red line 21 is going to be your peak around 68 now. This is daily, and then we're getting some potential to retest that low. Here's what I want to show you. Hopefully this thing starts. Okay. This is where the danger comes in. So we have really it's not so much the low on this page that matters, but it's this 200 days. So let me bring in the indicators. The good news is we're at peak values on most of the PPMs right here. So that tells us that we've got a decent chance at holding this 200. This is the weekly value is different than obviously than we're looking at 58,600. And even though we had a low at 59, I'm telling you 58.6 is the number. If we break the 21-week moving average, this just happened this week. You'll see, I'll blow this up. See these red dots right here? Those are the new Fibonacci targets. And I'm going to give you the numbers. I just want to point out that, you know, if I go to the monthly, we had targets way back when we went to the 120 level. That was the peak. We went to 126. Now as we look at this, we got this number, but this is new dots, and you'll see these dots that are, I'll zoom in, these different levels. We get these things, and I call them an island projection. So if they stay around, this is weekly. If they stay around for the second week, the probability starts to grow about us hitting at least the first fib target 1. And if I bring back the indicators, this PPM down here and the 200 are in very negative ground. So the 200 is actually trying to roll over. See how far we can go out. Yeah. So let's see if I can explain this and make any sense from it. You can kind of see that it's starting. Hang on. I'm going to attempt to draw with a mouse, so wish me luck. So this 200 is doing this, and what it looks like it's trying to do is to roll over, and you can see how all these moving averages are extending to test this level. If we start to get in a trending mode more on these, and that's what's happening here. That's what's happening to this area here where I just drew a circle. It's being forecasted down here. Doesn't mean it will. When we look at the indicators, there's pretty negative. suggesting there's a way better than even chance that we end up down in this zone. Okay. So now I'm going to, I'll give you these numbers, and then I'll come back up, answer some questions, see what we can do from there. So these fib targets, hopefully it's for the Bitcoin world, it is just an island like we saw in these other events. So those numbers are flat out ugly. They are 52,000 right here, 52,200. The next target down is 34,700. And the final fib target 3 is 23,940. So I'm here telling you, I don't think we see those lower numbers, but it's all going to be about that 58,200 number. If that breaks out, then you could see some serious capitulation. I'm not predicting it. I'm just telling you, these are places you want to watch. That's a trigger point, and the red dots you can see are also forecasting that we're going to test that 200-week, not day, 200-week moving average. Okay? All right. All right, let's come up, see what kind of things you folks have been talking about, see if I can respond to any of this. Yeah, Buffett hasn't sold anything. He's done. So Buffett's not selling anything. So you got new decision makers around there. That regime's done. Yeah, Bob war with Iran. Everybody knows it. You can see what's going on the screen. I would just stick with what the indicators are telling you, and I don't see a shockwave coming there. It's certainly possible something goes wrong. You can't predict those. And let me just see. Yeah, so everyone is worried about a crash. That's why it won't happen. What's my favorite line? Those of you who've been around, listen for the loudest noise in the room and go the other way. And those guys are screaming. Yeah, earnings on Nvidia. That's gonna be big. Like I said, there's some downward volatility, but not a lot. The buy the dip is still in there. If you watched the video last week I did on the longer term, that's pretty good. Yeah, I'm looking through some questions here, folks, and comments. Yeah, indexes were a great trade today. Absolutely. Let's see here, folks. Thanks for some of the nice comments. Always nice to be validated. No, I don't think it's so. Someone's talking. You don't believe the markets are overvaluated? No, I don't. I don't know what that means. Actually, I've not figured that out in 40 some years. But well, is there a rotation going on? Yes, you're going to see a lot of these stocks. Like I said, it's the mid cap and small cap rotation is real. That's happening. We could see some thinning of, like we saw, what, over, I forget the number now, but like 1,200 sell signals in the short-term database today. Yeah, the market's vulnerable. Could they go down 5%? Sure. They're, NASDAQ's down 2.5%. Could we test some of these lower levels? Sure. But absolute collapse is not going to happen with the intermediate database, at 65% long. Let me just look here. I like this. It feels real Orwellian. Yeah. Yeah, good luck. Sorry for your kidneys. Um, and that, yeah, that's a pretty funny comment. All right, just looking at a couple more things here, folks, and I'll come up with some final comments here. Yeah, I don't know any of those stocks. 1984, baby. Yeah. It's actually a really good year. I think 86 we did almost 7% GDP. Yeah, I don't think silver is going to follow gold. It didn't for what? How many years? Um, that's a good place because I think that's a good comment. What happened to silver was complete destruction. All the people that own that lost all their money. I happen to know a group on WhatsApp that, man, these guys are crying as loud as you can cry. And but yeah, so there's no reason for it to follow. I know the people that talk about the ratios, all that, but the patterns have been different forever. This last little spike up and basically almost like a capitulation climactic run is going to take a while to fix. That bubble that's out there on the weekly is going to be, it's a real thing. It may absolutely come down, but when it follows gold, the gold will be in the 6,000s, I would suspect. Anyway, my opinion. Let me look maybe a couple more here. Yeah, I think Bitcoin could go down quite a bit. Okay, it looks like I'm almost at the bottom of the comments here. Okay. Yeah, so anyway, folks, thanks for watching. We're just a few minutes. Well, we didn't start till quarter up, so we're right at an hour right now. A little bit more, hour 13. But anyway, so here's my feelings on this. Is that I don't see this collapse everybody's talking about. It's pretty tough when you get trillions of dollars of CapEx coming, already starting, that you're going to get some kind of major collapse. None of for instance, the WaveTech database does not roll over that easily. It would take quite a bit of carnage. We'd probably have to be trading under the 200-day moving average for a little bit to get these indexes to really signal. I think the NASDAQ is the most, if you want to call it, overdone, overvalued, and those valuations are being worked on every day. Today was another day. They don't have. There's no reason for. I don't see that anything out there that's going to generate a collapse. That would have to be. We'll go geopolitical, right? So something goes drastically wrong with Iran. Okay. Yes. Then then that's your black swan unpredictable moment. But outside of that, normal earnings flow, everything we're going through, talking about the Fed, processing everything, the likelihood of that type of event is pretty low. That event would be like a collapse of prices. Could, like I said earlier, could we go down 5%? Sure, why not? You know, could there be 7% decline? Probably in NASDAQ, but nothing looks like that. If you go back, if you join late, go back for the replay and look at the analysis that I did on the S&P and the NASDAQ. They're definitely different. I should probably do at least once a week. I should do the Russell. So if you guys will scream at me on the timeline to cover the Russell or the mid cap, and just hit those indices at least once a week. But I see it happening in the database, especially on the intermediate side. So I don't see the collapse. Certainly, if we were looking at individual symbols, we could find plenty that are vulnerable, especially in the NAS. But as far as the trends, the probabilities, I'm not sure. This is kind of interesting. Let me just see if I can. I just want to. I want to see if I can get you to a dashboard. I'm going to show this to you. If I can find. Yeah. So let me bring this up. Okay. Let me get it up here. So this is, I'm just going to go off screen. This is a portfolio. This is this new platform. But what I wanted to show you is this is for this, it's called Magic Formula. This is the Warren Buffett screen, by the way. And this portfolio is trailing 12-month returns. I built this thing many years ago. This has got a 20-year history on it. But this has been one of our in our staples for many years. But look at the trailing 12-month return, 43.97. That's why I was going off on advisors the other day, bragging about 10 and 12%. Yield year to date this year is 13%. Trailing quarter 13. That's this quarter. But here's what I wanted to show you. Forward 3-month probability, 81% to gain, and that's for this portfolio. For the S&P is an 83%. So this whole dashboard. So this is what we call our signal pipeline. So these are stocks that aren't owned in the portfolio right now, but everything. I've got forward-looking probabilities and stuff. This is just like risk. I'm not going to do this whole sheet, but this is the risk levels in this portfolio, and this goal and confidence, 90% goal, and the probabilities are just stacked. And this has everything to do. This has everything to do with what I'm talking to you about as far as getting into a portfolio management and start to look at, like, every stock in our WaveTech database has a map of expectations, how long it's going to hold, what it normally makes. But I ran this thing runs all the probabilities at multiple levels here. And this is what I was telling you earlier. This actually explains everything that's on this page and what you should be paying attention to. So, and even here, the dotted line here is the S&P. This overperformance on this portfolio is pretty insane, and it is what is it? I always forget the guy's name that was Buffett's mentor, but it's that screen that there's actually a website that you can go to that has the magic formula website. And it used to be out there, I'm sure it still is. But it's a very popular strategy, but adding our models and being able to get in and out of these stocks. So there's 50 stocks in here. It's an institutional grade portfolio. And now that we have, all types of different elements here, you can do a lot of stuff. I mean, this thing I'm going to show you one. This is one of the coolest projects I think I've done in my life. So I'll show you real quick. So yeah, so this page here is actually showing you suitability. So you can put in your risk tolerances in here. Like this is set that I don't want drawdowns greater than 12%, and then it looks at all the drawdowns and tells you whether you're suitable for this strategy or not based on what your tolerances are. So anyway, pretty darn cool stuff. And this will be out to the WaveTech community, I'm hoping real soon, possibly by the end of the week. I'm pretty close on this. I built another module while I was talking, and I've already glanced at it. I'm pretty excited to see that. And so anyway, folks, thank you. Seriously, thank you for being part of this channel. I'm trying to make a pretty serious comeback here. Got a lot of cool plans, especially with the new data center and everything I'm trying to build here, and continue on, especially these new products. And this is basically an overlay for WaveTech. So I'm excited about getting this stuff out there. Anyway, thanks for watching. Appreciate it. See you guys tomorrow, same time. Now for some music that I also made. Okay, have a great time. Yeah, Michael, I'm building a complete AI version to build your portfolios. You'll see soon. Game's changed.